Welcome everyone. So I know it's been a long time since I've uploaded any video. Uh, I just wanted to make a quick video about the environmental condition, that is the general market condition, given that there was a major correction recently. So what are my views on the market? How am I dealing uh, with my stocks? And there's a lot of panic going around, and uh, given the recent comment about the mid cap small cap bubble given by SEBI's chairperson. So I'll just give a quick brief of what is happening in the market, and what one must consider doing in such a time. Okay, so let's get right into it. Now, what most people are confused is that were confused, as I saw on Reddit, is that Nifty was not uh, falling that much, but they could see that their portfolio were in complete red. There was so much bloodshed, and uh, and it was confusing a lot of people because Nifty is at all-time high, and it has not fallen much. But why there is so much bloodbath in their portfolio and in majority of the stocks? As I've repeatedly told, and I'm still saying, it's because Nifty is not a right metric to gauge the overall market health. Nifty just is a collection of 50 largest good performing large cap stocks. So it's heavily concentrated based on them. It does not give the correct picture about the overall market health. The majority of stocks is not represented by Nifty 50. So as you can see here, since Feb, Nifty is making higher highs, and it recently just breached this trend line. But this does not depict the right market condition which we are facing, which I'll show you right now. Okay, because the majority of gains made over the past few months has been almost wiped out in the past few weeks due to the major fall that is happening in the mid cap and small cap stocks. So you should not look at Nifty for measuring the general market trend or the market health. Okay, so instead what you must look at is you have to go and type Nifty mid SML. Okay, this index you should always look at Nifty mid small cap 400 index. So it consists of the 400 mid small and small cap stocks. So this gives you the right picture of the market health. Okay, so let me just delete this line. Now, let's analyze what has happened and what is about to happen. Okay, so this, what you are seeing right here, is uh, the actual picture of what is happening in the markets right now. Okay, so as you can see here, the bull market began from around April. Okay, and it has given a fantastic bull run up till now. So I'll tell you how the market cycle works. Okay, uh, so once a bull market begins, there is a rally of about 30 to of about 25 to 35%. Okay, so if you can see here, from the lows, there was a rally of around 33%. Okay, so every time the index rallies 25 to 35% in that range, there will always be some slight pullback or a correction which will happen. Okay, like you can see in September till October end, this small minor correction or pullback happened, and after which again we saw another rally, which again now it again lasted 30%. Okay, so after this rally again, now we are undergoing a correction. Okay, so this is how it works. Every time, because market cannot go in a straight line always, it needs the pullback or the minor corrections. Okay, so what I was doing, I'll tell you. Once it came in the 25 to, I mean, if you can check here, once it reached the 25 to 30, once it hit 25% mark around here, I was already cautious because I was aware that we might expect a pullback or a correction in the upcoming weeks. Okay, so after this 23rd Jan, this huge fall, I was already cautious and was taking my trades or positions lightly. I mean, was not being too much aggressive. Okay, and when the 9th February this fall happened, I was almost 50% in cash during this fall, because market fell for 2 days continuous here, and majority of my stop losses in my major stocks, they were hit and I was out of the trades. So I was 50% already in cash on this day, uh, and again the on 12th Feb we again witnessed a major fall, if you can remember here. So on this day I was fully in cash. I was totally in cash, and now what I usually do is, once of this is a important thing to remember. Okay, every time this index falls by greater than 2.5 or 3% in a single day, if the fall happens close to 3%, uh, if the stop losses in your stocks get hit, then what you should follow is that you must be very very cautious, because there is a rule or there is a trend that if this index falls close to 3% on a single day, then it is almost always accompanied by similar fall in the upcoming days or weeks, which is why I always stay cautious when such a huge fall happens in a single day. I do not, I'll tell you when I'll again start investing. So when such a major fall happens, I do not invest until the high it from where the fall happened has been crossed, which means from here. Okay, until this blue line from where the fall happened is crossed, and I see strength in majority of the stocks, I will not put my money. Okay, uh, why? Because it's a trend, it's a rule I've been seeing from many years, that it's a pattern that is being almost always followed. If you can see here, even in the September to October correction, the same thing happened. Market fell by 3.2% in a single day, you can see, and following there was a little bit short rally, but yet this high was not yet crossed. So I was already cautious and I was not invested. And you can see the following days again it fell. It was trading in a range, again there was a fall, again there was a fall, and again the market rallied a little bit, and again you can see there was a huge fall on 23rd October, which is why it's always advisable that until this high is taken out, until you see a proper trend being established, you should not take any aggressive positions uh, when you're fully out of a stock, once your stop losses are hit. Okay, that is okay. Now, so until this high is crossed, I won't be taking any newer trades. Now what this helped? is that this helped me avoid all this huge fall. Now this might be looking just three big red candles in the chart here, but if you went and if you recall your portfolio in the past 3 to 4 days, it was total bloodshed. Almost all majority of stocks were down by 8%, 10% in a single day. And if you check the weekly performance of your stocks, then majority of them have tanked like anything. That's a huge loss. Now many of them might be holding in hopes that it will reach back up, okay, maybe, but that's not advisable. So you should just get out once your stop loss is hit so that you don't experience this major fall, okay. Now so this was the situational awareness of what has happened. I actually wanted to make a video around this time itself, but unfortunately I was busy and I could not upload. So now I'm making the video, okay. So this has what has already happened. Now what now let's analyze what are the possible cases, what might happen moving ahead from here, okay. I want you to uh, pay attention to these two lines, okay. The yellow line is the 50-day EMA, that is exponential moving average, and this red line is the 100-day exponential moving average. These are two key moving averages that uh, the index will respect when it is in a bull market, okay. By that I mean when it is in a proper established bull market, the index will always take support at either the 50-day EMA or the 100-day EMA. As you can see here, during this October fall, it took the support from here and it jumped, and you can see the same thing is being repeated right now. The 50-day was being held. You can see it took support here, it took support here, it took support here, but the 50-day was breached recently, which was a very bearish indication to me on this day. um, but the 100-day moving average is being held. We recently saw a bounce back. I'll tell you why you should not be excited by this bounce, okay. I'll explain you that also, okay. So now it has recently took us support from here, from the 100-day moving average as expected, okay. So what are now many people are excited that yeah, this correction might be over now, given the jump from the last day. I'll tell you why you should not be excited about it, okay. So this there is this theory that if a index or a stock falls continuously for 5 to 6 days, okay, continuously for 5 to 6 days, it reaches a region where we called oversold region, okay. Oversold region. If a stock or an index falls for 5 to 6 days continuously, we call it an oversold region, okay. And whenever we reach an oversold region, there will always, almost always, it will be a temporary bounce, okay, temporary bounce in the upcoming 2 to 3 days. This is given fact which has been, which I have seen over the years. Many index and stocks will follow, okay. So what you're seeing right now, it, according to me, it might just be a temporary bounce, okay. I'll tell you till which levels also. So as you can see here, 1 2 3 4 5 6, from 6 days the market fell heavily. So this was expected, and given that it was near the key support, that is 100 AMA, I knew that on this day there will be a temporary bounce, okay. Now it, as per me, the bounce will be up to, just a second, the bounce is expected to be up to here, okay. Expected up to here, which is coinciding with the support here, that is the 50-day EMA, okay. uh, so the small bounce is expected up to here, after which there are two possibilities. Either it will take resistance from here and it will continue correcting some more, and if it goes below uh, this day's low, that is this fall, it's a really very bearish indication. Okay, it should literally scare you, because that might indicate the end of the bull rally we are seeing from the last year, if this scenario plays out. Okay, and another scenario, this is the first scenario. Another scenario is that it might rally up till here, and it might consolidate here, or it might just trade in a range over here. Okay, for multiple days, and then it might continue its rally. Okay, it might continue going up till up. This is another important major resistance area. Okay, it will struggle to cross this region as per me. And let's say if it successfully goes above here, then the last and major resistance will be this upper blue line, and it might cross it and continue the bull rally we are seeing for almost a year. Okay, so I am personally expecting the second part to play out, given that the outlook on the global markets and even the Indian markets is positive. uh, the overall market is expected to be in a longer term uh, uptrend. Okay, by longer term I mean given weeks to months. Okay, but this on the shorter time frame, it is definitely not a right moment to invest, thinking that the stocks are in a discount, because you never know how much they will fall more or tank more. uh, so I would avoid trading until all these key levels are breached. And uh, the the majority of stocks which you can see here, okay, I have literally like so many of them. They should be showing green days. I mean, they should be showing strength on continuous days, not just a single day. Okay, so that will indicate that the market health has been improved, and you are now ready to take the breakouts will are working, and you are now ready to take good aggressive positions, and again begin your trading journey. Until then, it's better to wait and watch out, because the market health is not the market health is poor right now. So it's better to sit in cash and wait for the right opportunity. So this was my view, and so that was my view about the general market, because I could see a lot of panic on Reddit, given that um, uh, they were like 50% profits were there, accumulated over the past 6 to 8 months. All have been wiped out. I'm only 10% in profit right now, or my portfolio is in red. So I'll tell you one thing about the markets is that you must this is why I advise to have a proper system or strategy always, because if you just simply trade, okay, in a bull market anyone can make money, I'll tell you all, because majority of the stocks will be in an uptrend. So even if you pick the wrong stocks or so, even then you will be slightly in green, in positive, anyone can make money. But the most important thing comes is how do you deal with your stocks when the market is in literal bloodshed mode, as now, as how do you deal during times like this pullback, and the recent major fall you are seeing right now, witnessing right now. So so that is why I advise on having stop losses on rules which will get you out immediately. So let's say you made some 40% or so gains, right from November till this rally you made 40% gains. Okay, and if it will just take this few days of market fall to completely wipe out these gains, if you don't manage risk and if you don't have proper rules, which is why I advise on being cautious. on studying the past, uh, the past charts to actually know how you can protect yourself during times like these. Okay, so so a smart person who has a rule set, what they'll do is that they know all these plays, how the market cycle continues. There will be a pullback during this specific time, so they'll be cautious, and they'll start selling their stocks right around this region, because they know that after such a rally, the pullback is almost always expected. Given that the many breakouts were not working during this time, you should be cautious, and you should just uh, have proper stop loss and to protect yourself, and you must avoid trading in this market. What I see is a lot of people, um, when market tanked these 3 days, and but it literally went up swiftly the next 3 to 4 days, they'll get excited here. Okay, greed will kick in around this time, that all your stop losses are hit, but seeing your stocks go back up without you will tempt you into trading again, but you must always be careful, because like I told you, until this high is breached, until you see proper strength in the overall market, there you cannot be sure that this correction has ended. It usually lasts for a few weeks or days, so that would have saved you from this fall and the literal bloodbath that happened in the last week. So you must always have rules. So I teach all of this in my master class. I mean, in the mentorship, paid mentorship, which I have. So I've already taught this to the people whom I've mentored. So this was just one part of it, how you should gauge the market and protect yourself from gains and protect your gains, because anyone can make money during bull market, but the real task comes how you can protect yourself at times like this. Okay, so always remember, there is a time to go long, in the sense that there's a time to go aggressive, there is a time to stay cautious, and there is a time to stay fully in cash during bad markets. Because let's suppose, uh, because you never know that when a bear market will start. Okay, every bear market starts with a correction like this. I'm not trying to scare you, I'm just telling you the fact. You can go check out January 2022, the same index, the same chart. You can check out 2018 to 19 bear market. Literally every bear market will start when the bull market ends, and it ends with a correction like this. So you must always have stop loss set, because you cannot be always optimistic and expect that after such a fall it will always rise back up. Maybe it might in the very long term, but you never know. If the bear market starts, and your stocks will literally be 80-90% down, and literally it's such a mental pressure, seeing your portfolio in so much red. It will take literally, don't know, when a bear market starts, it lasts for months to years. Okay, so for 2 years, for 1.5 year, sometimes 3 years. So you have no idea how much you will be stuck in those stocks. Okay, all your gains will be wiped out, plus your portfolio will be in a total negative loss. It will affect you mentally a lot. So you must always be cautious. Okay, so I just wanted to give a heads up about the market situation right now, as a lot of people are in panic, and maybe it might be their first time experiencing such a thing. But this has already been played out, a lot of times. You can see here, this was played out during the October 2021, when the COVID bull market ended. Okay, and you can see I have these were marked by me while I was mentoring one of my uh, student. Okay, as you can see, major fall greater than 3%, and this high was not yet crossed. Okay, and what happened? You can see literal again the market crashed within a few weeks. Okay, within a few days. So which is why I always advise, until this is properly crossed, you should not invest. It would have saved you from all of this. Okay, again you can see here such a nice rally, correction, such a nice rally, and again a small correction, again a small rally, again a correction. So this is how market cycle moves. So it does not always go up in a straight line. Okay, there will be small corrections like this where you have to stay cautious. Okay, because you never know when that small correction will turn out into a long bear market like this. Okay, so you must always be cautious and manage your risk. Thanks for watching the video, and I hope that it was helpful to you. You can leave your honest feedback or comment in the comment section, and or any doubts which you are having. Thank you.